All right, everyone. Welcome to our March 10th edition of This Week in Crypto. What a week and what a couple days. Lots of pain going on. And for almost all of you who are bulls rather than bears, this has not been a fun stretch here in the first few days of March. And, there are a lot of reasons as to why things are bleeding. I think the overarching consensus opinion is that the Fed is at least stating that they are planning to raise interest rates on the upcoming FOMC meeting in a couple of weeks, and it's going to be more than expected. And this was kind of after everyone assumed that things were going to be cooling off after the brutal stretch that equities and crypto had in 2022. We had a month, maybe a month and a half of optimism as prices were looking like they were rebounding. And then Jerome Powell basically comes out with the news that he's going to be sending interest rates up likely to around 6% now, which is actually quite high. And when interest rates get high, companies have a harder time succeeding. Stocks tend to go lower, and crypto, which is very much still attached to the S&P 500, and we'll go over that, they kind of feel the repercussions, even though we have this sector which is posed to be kind of the counter banking industry out there that doesn't rely on the ebbs and flows of real life companies and the dollar and all of these things. But as evidenced, at least for the last year plus or so, maybe a year and a half, ever since the November 2021 all-time high, we've just seen more and more correlation between the two, which has gotten us to where we are. Many people kind of view crypto at the moment as kind of a super high leveraged tech company. And of course, it isn't that. And there will be a future that doesn't involve crypto being attached to, NASDAQ, for example, the way it has been. But for now, evidence shows that it is. And we suffer as a sector when this happens. And, quite clearly looking at these price returns, Bitcoin being down 13.5%, Ethereum down 16%, that really doesn't tell the story, because anyone who's been in altcoins especially, you can see as we go lower and lower down the market cap ladder here, the returns just seem to get worse and worse. There's a few exceptions, Blockstack, somehow up 74%, but nothing else in the top 100 was even in double digits. We have a few at plus 6%, Neo and Clayton. But yeah, it's few and far between the success stories that have been going on as of late, with a lot of market caps shrinking at the moment. Tons of longs being liquidated as well. There have been quite a few conversations on Reddit and Twitter about this, and we'll get into that as well. And look at the social volume too. Bitcoin and Ethereum up a modest 5.5% and 7.5% respectively compared to the previous 30-day cycle. So people are talking about crypto more. That's generally a good thing, whether it's good or bad. We want social volume to be going up. This isn't much. A lot more discussion about Tether, interestingly, a little about USDC, which has seen its whales really dump hard, which was kind of a foreshadowing red flag here. And then, some HEX being up a ton in terms of social volume, understandably so. It's one of the few positive return assets. But for the most part, it's just a little more discussion right now as people question whether crypto is even viable. We're starting to see a lot of mass panic, red flags that we actually look for as a good sign of a bottom. And for those who've tuned into previous videos we've done, we state all the time how markets tend to go the direction of the crowd's least expectation. So if everyone expects things to continue to go up in August and September and October and November of 2021, well, eventually they're going to feel some pain when they're leveraging longs and assuming that crypto is just a money-making machine. It's a zero-sum game at the end of the day. And at the same time, if everyone expects the beginning of 2023 to be a continuation of the pain we all felt in 2022, then it's going to be more likely that the few that are actually believers in crypto are going to be handsomely rewarded, as they were for at least the first month and a half of 2023. So now things are correcting again because perhaps people got a bit too excited after the run up that ended on February 21st, I believe. And that euphoria has quickly turned right back to fear. And, understandably so, when you see percentage returns like what we've seen over the past 2 weeks in particular, we're looking at the last 30 days, but, if I switch to the weekly, it's even more telling. If you see something like this just in 1 week, of course the crowd is going to turn negative toward crypto once again and start believing that everything is a scam and they never should have fallen for it. I saw a post on Reddit about, Lambo, the company Lamborghini, telling renters of Lambos by the crypto crowd that they can't return their Lambos now. All of this stuff where everyone's kind of laughing at the people who over leveraged or thought that prices would go up too strongly, which is kind of a natural way that crypto tends to laugh through the pain, right? Because even those who are joking at people who lost more than them, they're feeling pain themselves. And most of you on this call are too, if you're investors. So, with all this being said, the goal of this call will, of course, to be, to investigate the rubble here and find some of the, opportunities that could be presenting itself as they normally do when we see this level of bleeding in the markets. And then also understand exactly why it happened, so that next time, and there will always be a next time, even when markets recover and things are looking great again, there will be a time where we'll have weeks that look like this again. So we want to prepare ourselves and learn from this kind of thing on how to avoid falling into the trap of being too aggressive with portfolios, making sure that we're being safe, taking profit when necessary, adding to our portfolio when necessary, which there's much more of an argument for that right now than the former. And let's see, collectively as a community where we can go from here, as so much content is out there, either saying that this is the absolute bottom or this is just the beginning of the dump and we're going down to 15K for Bitcoin and sub 1,000 Ethereum once again. Lots of extreme opinions out there, but the most rational voices, which we try to be ourselves, they usually show a mixture of both bullish and bearish examples and help you come to the best conclusions. So that's about it on the raw price returns and the social volume in crypto. Let's take a look at what the whales are doing, which is usually what everyone likes to check in on when we do these calls first and foremost. So it's been an interesting development here, especially with Bitcoin here in green. This is Bitcoin sharks and whales, and in USDC, which is the second largest stablecoin by market cap, which is absolutely plummeting. First, let's just take a look at Bitcoin here. So Bitcoin's kind of gone through this up and down range basically since November 21st. We're going on almost 4 months of up and down movement by the whales, and there's been some correlation, right? So if you were getting into crypto right around November 21st, a couple weeks after the FTX collapse, you'd see that whales are accumulating and eventually that leads to price rises. When you see them start to decline, even though prices are rising, that would be a sign that we might be getting a little overheated. This is exactly the kind of pattern we saw back in November and October of 2021, when whales were taking profit, owning less and less of the supply, but prices were moving upwards. And that led to this same kind of collapse at about the same pace, obviously on a grander scale because it was coming off of an all-time high. This is only coming off of a a sliver above 25K before it just, plummeted. And interestingly, ever since March 3rd, there's actually been a rise once again. And we're seeing that these whales are accumulating going into this dip that already had started about 2 weeks prior to it. So if we just look at what's happened between last week and today, these 10 to 10,000 Bitcoin addresses that are sharks and whales, they have added 0.25%, a little over 0.25% of the total supply of Bitcoin, 0.38% more to their stacks. This may not sound like much, but it's tens of millions of dollars that they've added. And they've actually gotten back to where they were around February 22nd, 25th or so, it looks like. It's not saying a lot, right? We still have a long way to go to see sharks and whales coming back here, owning 68% plus of the supply, but it's a good start. And I'm actually a little encouraged by the fact that, we're not seeing a drop that looks like this even after prices were already dropping, right? Prices started dropping and whales have actually accumulated over the past week, despite all this bad news that's come out with, the Fed and the FOMC meetings looking like they're going to hike up interest rates more than expected. Crypto sharks and whales are saying, okay, now that we see some pain in the markets once again, we're going to keep adding to our stacks. So that's a good thing. What's not a good thing is, as I mentioned, the USDC supply of $100,000 to $10 million wallets, sharks and whales. They were holding 40.2% of the supply just about 4 weeks ago. Now they're holding 35.2%. They've dropped a little over 5% of all of USDC's supply over the past month. That is a ton, right? And you may be saying, well, maybe they were going into other stable coins. That's true to an extent. We see that BUSD, they were actually accumulating. There was an initial point where everyone was freaked out about BUSD a month ago because that's when the SEC talked about suing Binance and more specifically Paxos, which owns BUSD. And that caused a lot of sharks and whales to get out of it. So they started accumulating again at the expense of USDC. There's a little bit of mirroring going on right here between the blue and the orange lines. Meanwhile, Tether was also a beneficiary. They were adding and adding all the way up until last week, which is interesting because that was the exact day that Bitcoin sharks and whales began to accumulate once again. So Tether supply by sharks and whales topped on the same day that Bitcoin supply bottomed, meaning it is almost a certainty that a lot of this Tether began going into Bitcoin right about here. So that's a good thing overall, but ideally, we want to see Bitcoin going up like we see here back in November of 2021 all the way through November 21st to December 21st. And stable coins going up at the same time, right? Especially right around here in early to mid-December. You see Tether going up, Bitcoin going up, DAI, BUSD, USDC, all of them going up together. That was a sign that we would see something like this and a really pure buy signal coming up in the near future. Right now, it's more of a mixed bag, right? Yeah, we have Bitcoin sharks and whales accumulating a little once again, but USDC falling off, BUSD falling off, even Tether and DAI falling off. So all of these stablecoin market caps, or not market caps, but the amount held by the key sharks and whales who perpetuate these markets, they've all dropped off at the expense of a mild gain by Bitcoin sharks and whales. So, this green line is the most important, but when all the supporting lines, the stablecoin lines are going down, it really means that just a lot of the buying power is evaporating at the expense of more money going into Bitcoin. So it's almost kind of a neutral signal. So, I wish it could be more helpful and we could say this is absolutely a definitive sign that a bottom is in. Sharks and whales are not really indicating that. They're indicating that, prices absolutely can go down more. There will be a bottom. There will be a time where you start seeing stable coins going up again with Bitcoin going up. And that is the time that you want to really, feel confident that a bottom is near. Moving down this template a little bit, certainly not as important, but I do want to point out that Ethereum, sharks and whales, holding anywhere between 100 to a million Ethereum, really wide range. They've been declining pretty much since early December and now hold 64%, easily the lowest in the last 6 months. I want to know exactly how long it's been. Oh yeah, we need to go way back, even further. Yeah, this is the least they've held pretty much since the start of Ethereum. So that's, not the worst thing in the world. They're still holding 2/3 of the supply or a little bit under it. But yeah, I mean, it's a little worrisome that Ethereum's price is just, or Ethereum's sharks and whales have gradually distributed more and more to smaller addresses out there. But there are so many uses for Ethereum. Money is locked away in DeFi and all sorts of things that it makes sense to an extent. So take this with a grain of salt. Another very important graph, we zoom back into the last 6 months. How about this? Bitcoin yesterday was talked about at its highest level since June, I believe, about a 9-month high in terms of discussion rate compared to the top 100 altcoins, which is what this chart measures. It's the percentage of discussion relative to the other top 100 market caps. When you see it consistently down here, it means traders are a little more interested in discussing altcoins than they are in discussing Bitcoin. That is a bit of a greed symbol. When you see bars like this, it's a fear symbol. You would much rather see fear symbols because that is an initiator of prices going up, because small traders are staying away. They're not interested so much in Bitcoin. They'd rather jump into Doge and Shiba and all these coins that many argue don't have as much of a fundamental purpose. And you can see throughout this whole stretch, not a lot of Bitcoin discussion, well below what we deem to be kind of the health line right here, which is 20% or more in discussion. We had a brief moment where it spiked up. Everyone got back interested in Bitcoin. This was because it went over a key marking of 20K for the first time in about 2.5 months or so. And then it went right back down to altcoin greed, finding those 2x and 3x opportunities instead of hodling Bitcoin and gradually seeing your portfolios grow. Now we see a huge fear spike right here as prices have plummeted and everyone is essentially, not everyone, but a larger portion of people than usual are getting their coins back into Bitcoin as a relative safe haven compared to the assets that have dropped, 40%, 30% in the past week. At least we can say with Bitcoin, it's down, what did I say, 13% or so. That's not nearly as bad. So a lot of people are kind of hedging their bets and trying to diminish the losses that they're going to take before markets finally turn around. And that is usually a good sign that markets will turn around soon. So that's a very optimistic indicator there. What else do we have? I'll save funding rate for our model that I'll show in just a moment. Actually, yeah, let's just do it now. So funding rates, what do you know? We see a lot more green here now, a lot more people shorting than we've seen in quite a while. And these are mainly Binance exchanges, but there's a few on DYDX and Deribit as well. You can see that we've got a whole lot of negative funding rate for Tron. This is Kava. And then some minor funding rates all over the place. Avalanche, Axie Infinity, Binance Coin, Bitcoin Cash. Remember I said Bitcoin. That's a very important thing to be shorting right now. If people are shorting Bitcoin, that's a promising sign that a bottom is close, because any liquidations on those shorts to the top asset, King Crypto, that can propel all of crypto upwards in order to liquidate those assets, those positions, and essentially use them as rocket fuel to start recovering back to 20, 21, 22K and beyond. So very interesting there. Harmony, Hedera Hashgraph, Loopring, I'm skipping over a few, OMG Network, Ontology, Stellar, Synthetics, Wi-Fi, just to name a few. So clearly there's a much more indicative bias towards shorting than longing now. And this is what you want to see as a bull. We were seeing, even as markets were declining a week ago, it was kind of break even. I remember updating the chat about it. Now it's definitely veering towards shorting. So people are trying to make money whether markets go up or markets go down. And now they've seen a couple weeks of markets going down, and they finally decided, you know what? I'm just going to hop on the train and try to earn a little profit by betting against the markets, because that seems to be where things are going. Usually not a wise thing to do. I mean, they could be right in this case, but you don't want to position yourself in the markets based on the trend that you've been seeing a couple weeks ago. For the longer that a trend is going in one direction, the less of an argument there is that it's going to continue in that direction. It's counterintuitive a little bit, and it's something that every trader out there, you know, kind of falls into the trap on. And you know, you hear all the time about buying when there's blood in the streets and getting out when everyone else is talking about Lambos. This is blood in the streets time, and that's not a you know, an implication that it's time to buy yet. We absolutely could see some staggeringly low numbers that we did not expect to see again this year. But if it happens, you're just going to see more blood in the streets, and you got to think of it in terms of probabilities. The more things go down, the more people are panicking and jumping out in crypto and saying crypto is a scam. And when those things happen, those are usually the ideal times for you to open a position. Now, we can talk all we want about sentiment, but we also have to pay attention to on-chain metrics. And that's where all this comes in. We can start by taking a look at Bitcoin's trading volume, which today has hit its highest level since November 14th. That's a big deal. 4-month high in trading volume, meaning there are a lot of people that are very polarized now that markets have corrected to the extent that they have. This is a very big drop-off that is causing a lot of people who had been sitting dormant during all of this madness, and they're engaging once again. In general, that's a good thing. Rising volume over time means more utility. More utility means market caps can grow. Transaction volume, on the other hand, not really much to say. We did have a very interesting, let me show it on Twitter here. We had a very interesting, massive transaction a couple days ago by the Department of Justice. And the speculation is that they transferred basically 49,000 Bitcoin through a series of transfers to Coinbase and a few new addresses as part of dispersing some of the Silk Road fraud and stolen assets that occurred. It's interesting because, you know, markets did kind of fall off a cliff right when it happened. So there is an argument that it kind of perpetuated prices going down. I would just call it more coincidental than anything, because equities are falling off a cliff now as well. And as we said, crypto is very attached to equities still. But regardless, this was the biggest transaction by a large margin, just this one, 666 million. Biggest by a large margin in 2023. And even going back to 2022, it rivals some of the largest out there. So that was interesting to see, to say the least. And going back to our on-chain metrics, that when we look at this should show up as a big spike on-chain transaction volume, but it really didn't. And that kind of points to that Department of Justice move of 49,000 Bitcoin. It was more of an anomaly than anything, and it wasn't really a trend that was being followed by the rest of the markets. So transaction volume overall is still low. Trading volume absolutely has risen. That's great that we're at a 4-month high, but we do still want to see a little more of this and this, just a ton of activity. And right now people are beaten down. They don't want to make as many on-chain transactions, and that causes stagnancy in the markets. Further, when looking at utility, we can look at daily active addresses, which is the unique amount of addresses that are interacting on the network at any given moment. We've seen a little bit of an uptrend here. You can see this orange / tan line moving up over time. There's an average of about 971,000 daily active addresses on the BTC network per day. That puts it right about equal with where things were back in early December. In fact, it exceeded it. So we're at, it looks like at least a 6-month high. If we go to 1 year, yeah, so it's basically the highest daily active addresses since May of 2022, about a 10-month high when measuring this as a 30-day trend. That's a big deal. It's definitely good to see that we're consistently getting, almost 1 million daily active addresses per day, with many of these days exceeding that number. Good sign of utility, and over time, if we go back to, let's just say, 2015, you can absolutely see a correlation with when daily active addresses went up and prices went up. And yes, there's a little bit of causation there where prices start to go up and then a lot of active addresses start to pop up. But there's also some leading indication properties there. And when you see, something like this begin to start right around the beginning of the pandemic, that's a sign that the dip might not be as scary as people think. And we're beginning to see a little bit of a rise once again. Ever since June of last year, things have been rising. So it's not these steep rises yet like we saw in 2019 and 20 and in 16 and 17, but we're getting there. So utility is showing some good signs, at least on the daily active address side. On the circulation side, not so much though. It's almost like a polar opposite view where you're seeing that basically over the last year, the amount of unique tokens that are moving from address to address are going down. And that's concerning. You need to see both addresses going up and coins going up, kind of like what we saw in 2016 and 17, in order to really justify a true bull run. Even this one here, the true all-time high in 2021, didn't have a lot of supporting circulation. And that was why we had such a steep drop-off right afterwards, even steeper than the drop-off we saw following the 2017 bull run. And if we look at our NVT chart, you can see we're still well into bearish territory for an 8th straight month right now, showing that the amount of unique tokens moving from address to address is not justifying where the market cap is here at just above 20K price level. So it's kind of a good news, bad news story in terms of addresses interacting more and more, but tokens, actual individual tokens on the BTC network being interacted with less and less. Let's move on. MVRV, going back to the last 6 months here. What do we see? Well, obviously, as you would expect, the average trading returns have plummeted into negative territory where they've been since the beginning of the month. And as of now, Bitcoin's MVRV is at negative 12%. We've talked about right around negative 15%, about there. Think about there. That's around the spot you want to see in order to see an almost certain bottom coming in. So we're not quite there yet. Many times it never does get there though, right? Like right here, MVRV barely got into negative territory before we saw a huge rocket launch that took us above 25K for the first time in a long time. Now we're back here. 30-day MVRV is negative. The 365-day MVRV is also negative at negative 11%. So both the short/midterm and the long-term average trading returns indicate that there's some meat on the bone, and there is an objectively solid indicator that has performed well over time that indicates that right now is a better than average time to add on to your position, at least in terms of risk. There is less risk than the average point during Bitcoin's 14 to 15 year run, indicating this is the time to buy, or at least a better time to buy than usual. We talked about funding rates. Take a look at whale transactions here. So what's going on the whale side? The red bars here indicate $100,000 or more transactions. They're kind of staying pretty flat. 1 million or more transactions are actually starting to move down again after they really ramped up here right around the price bottom. If you saw these $1 million plus whale transactions firing off at the highest level since November, this was a pretty nice sign that we would have liftoff. Maybe not quite to this extent, but it absolutely said that there was some buying the dip going on from some very large whales. But as prices have declined, whales have not really engaged this time around. Maybe they will over the next few hours or the next couple of days here in the weekend. But for now, we're not seeing enough to be super excited about this. And we've touched on the 10 to 10,000 tiers. Let's look at it in another perspective, where we actually look at the amount of addresses. Just those 3 tiers is all we need. You can see, the brown line, the 10 to 100, these are kind of the small to large shark addresses. 10 to 100 Bitcoin is still a whole lot of money, especially on the higher end. Those are millionaire addresses. So they're going up pretty consistently, which they have for a very long period of time. However, when we get into the whales here in red, 100 to 1,000, they kind of flattened out here ever since the very end of December, where there were 14,120 of those addresses. Now there is 10 less. Let's see here, 14,038 there. Yeah, so give or take maybe 80 less addresses now of this size, which isn't a lot. But what is a lot is the drop off in 1,000 to 10,000 coin addresses. These are considered kind of the largest active whales, where there are definitely some exchanges mixed in there too. But as far as tiers go, this is the most, the largest tier that is still considered useful in terms of, whale sentiment and behavior that can impact markets. So on January 24th, there were 1,944 of these large addresses. Now there are 1,899, just fell back below 1,900. So 45 less addresses, that equals a drop off of about 2.3% less of these large whales. Not great to see. I'll come back to the ratio of volume, transaction volume and profit to loss in just a moment. Taking a look at mean dollar invested age, really nothing to get excited about here. No indications that dormant tokens are moving around, and that old addresses that have been holding a Bitcoin investment for a long time are suddenly uprooting their coins and moving it around. That generally is what you want to see during a bull run, is a lot of those older addresses becoming engaged. Not happening yet. It will at some point, but nothing to show for that yet. Network realized profit loss, nothing really exciting there. As you would expect, there are some minor losses. I mean, these aren't minor, but relative to some of the hugest spikes, they're not that bad. The biggest network realized loss happened on March 7th, and it's been kind of just a gradual loss fest ever since. When we really start to see bunches of losses like this happening near the bottom as the FTX collapse was happening, that's a good sign that we're nearing a bottom. As far as supply and exchanges goes, interestingly, not really any sign of coins moving back to exchanges. It's just continuing to go lower and lower despite this plummet in price. So people aren't moving their coins to sell just yet. It would almost be preferable in this case for the supply to go up because that indicates that there's some panic sellers out there. But that's not what's happening. And the supply in exchanges is down to 6.56%, which is the most in nearly 5 years now, or the least, I should say, nearly 5 years. As I mentioned, social dominance is super high at the moment. You can see today the spike is at its highest since right about September 27th. And it basically indicates there's some fear going on and a lot of polarization. When crypto is being questioned as just an entire sector, that's when people start to talk about Bitcoin first and foremost. The attention is no longer on the SH coins and whether they can get a 2x in the next month or so. Nobody believes that's viable right now after watching what they've seen the last couple of weeks. So of course they're talking about Bitcoin more and more right now. You can see individually this social volume spike is by far the largest in the past 6 months. If I go back to a year, the last time we saw a social volume spike this high, July 10th. So literally 8 months to the day since we last saw a spike that big. Weighted sentiment, take a look at this. Super interesting. A very, very positive spike right now. So it's almost contradictory because you're seeing so much discussion, and discussion rates are half the equation when it comes to weighted sentiment. If we were to look at just the positive sentiment by itself without social volume getting involved, we see a little bit of a spike there because there's more discussion. What if we had negative? Almost the opposite. It's going down. Very interesting. So yeah, there's definitely more discussion related to Bitcoin. And perhaps a better way to look at it, now that I think about it, why don't we look at this chart here, which shows the most positive words and the most negative words, blue and red, respectively. We had a very interesting outlier here back on March 5th. It was almost all on Twitter. There was just a ton of negative words that were popping up all over, almost to the point where it seemed as though it was pre-planned to try to throw traders off. That didn't really seem to have any impact on anything. But then when we started to plummet, this was more of like an actual real indication of how traders were feeling. And there was actually a very high level of negativity. And now it's kind of more neutralized, and you're still seeing some positive spikes with a regular amount of negative words. And generally, when you see a high level of negative words like we did back here on the 13th, that's a good sign that prices are going to rise, as it did back then. But now it's kind of all over the place. And I'm interested to kind of see how the upcoming days go. Like if prices kind of just flatten out through the weekend and Bitcoin hangs out around like the high 19Ks to the low 20Ks, how does sentiment start to react after the dust and all of the volatility kind of settles temporarily? Will people begin to get positive again and everyone proclaims it's time to buy the dip? Or will they get super fearful and be like, oh man, I thought a bounce would have happened by now, but it didn't, right? So there are multiple ways you can look at it, but overall, there is more discussion rate, which is good, but it's kind of zigzagging back and forth between a little bit more negative to a little more positive. All right, now let's go back to that template I told you about to measure the ratio of transactions, profit to loss. Here we go. So yeah, as you would expect, massive, massive losses happening ever since the plummet began, going even back to the end of February. Basically what this metric does is it measures the ratio of transactions where the coins are leaving an address at a higher price than when they got them, or at a lower price than when they got them. If there's a lot more of those moves happening while it's in profit, you see these high spikes and it's more indicative of a drop. When you see super negative spikes like this, it's more indicative of an upcoming rise. It's not always immediate, right? As it shows here with last week being the most negative Bitcoin ratio we've seen since June. And that kind of marked a bottom back here. But this one didn't, right? Because we fell further even after this entire week completed. And now we're at a historically low Bitcoin ratio of daily on-chain transaction volume and profit to loss, where there are, if I'm doing the math right, I think there are 2 transactions at a loss for every transaction at a profit. Might even be 3 to 1. I'm not quite sure how this negative 0.67 would come out in terms of like a fraction, but you get the idea. A lot more losses than profit, and that shows us that a bottom signal does seem to be arguably coming up. And of course, Ethereum is right next to it at negative 0.65. So these are both historic starts to the week in terms of the amount of lost transactions versus profit transactions that are happening right now. Even if I go back to 2018, yeah, I mean, look at this spike over the last 5 years. Nothing even rivals them. But of course, it's a small sample size. We need to see how the next few days play out. But, I would expect that prices need to rise a little bit. Otherwise, we're getting one of the largest loss ratios we've ever seen in crypto. And usually things have a way of evening out so that we don't see such anomalies once the week completes. All right, let me take a little sip of water here. I'm doing this solo without Maxim. Maxim's got some prior engagements, but he says he'll be back next week. Curious if you guys have any questions. So let me check out the chat really quick. Alerts on USDC and USDT. Plenty of de-risk warnings over the past weeks. Right before this dump, there was a 15% change in 1 hour on USDT exchange flow balance. Let's check that out. I want to see exactly what Danny's referring to, and thanks for the tip, Danny. So if we go to USDT, and let's go to, let's just make this a line for now. Price of Tether is not such a big deal, as you guys know. And then exchange flow balance. So yeah, we are seeing a lot of negative exchange flow for Tether lately. I think that's what Danny's referring to. It isn't too extreme, but it's definitely evident. And that's a sign that we might be topping out soon, and that's kind of exactly what happened. Hey, Ercon. Agreed, Crypto Genie. It is definitely a very risky market right now. Going over a few other posts that we put out over the past week here. And then I have a cool model to show you guys. So check this out. It should even be crazier now. Yeah. So this is the current snapshot of MVRV opportunity and danger zones. Before it tries to refresh, I just want to make sure you guys see this. Everything here, almost everything there now it's refreshing. But going back to the Twitter post, it's even higher now, but you look at all these green bars indicating we are in a higher probability of prices rising now that things have dropped this much. And many now are actually above this dashed line, illustrating that they're in a top 5% zone historically where bounces typically occur. Very few are in the danger zone here. So, if you are a risk tolerant kind of individual, this kind of model may help guide you in terms of which altcoins seem to be the most underbought at the moment. Other thing I wanted to show. Oh, the S&P 500. Let's take a look. So we've got Bitcoin's price down here, Ethereum, S&P and teal, and gold and gold. Let's look at just the last month. Check this out. Gold's price starting to skyrocket once again, while the S&P 500 and Bitcoin and Ethereum, they're all kind of following the same pattern downwards right now, all at their lowest point over the past month, staying very closely attached to one another. One might argue we had a little bit of separation going on here in mid to late February, but overall, they're staying very, very closely tied, right? And as we've talked about before, crypto goes on its best runs when it's got absolutely no ball and chain connected to the S&P 500 or equities in general. So right now, there's a very, very heavy ball and chain. It's keeping them close together. All right, so as for the new model I've been discussing, check this out, guys. Not released yet. It still needs some work. But overall, I think this is pretty special here. What it shows is the top 10 largest transactions on each of these assets network and indicates whether one of those top 10 has happened in the past week. Especially if it's happened in the past day, then you'll see a big wide black bar like this showing that, for example, Hashflow saw a $53.5 million transaction just recently. So there could be something going on there, and it might be an asset to watch. We can see Immutable X, a $15.8 million transaction today. Lido DAO, 17.9 million. Synapse 2, 10.1 million. And there's a lot of smaller ones here ranging between 350K to 2 million or so that have happened today. You can see these two huge bars. These were Bitcoins with a 300 million and $670 million transaction respectively. Those were the Department of Justice moves that we talked about earlier this week. And you can actually scroll across here when you see, for example, Avgachi Ghost Token. They had an $8.1 million transaction yesterday, and notice this orange square next to it. That indicates that there was an exchange address moving to another exchange address. That's usually not the best news. It's indicative usually some sort of sell-off at worst, and at best, it's some sort of just transfer from one exchange address to another for whatever reason they decided to do so. So it's kind of a neutral to negative move in terms of where prices typically go after you see this kind of transaction. A yellow square indicates that it was a non-exchange address moving to another non-exchange address. That's just kind of a true neutral event that doesn't really have much impact on the markets at all. I don't know if there are any. Here's a red one. So red indicates that it was a non-exchange address moving to an exchange address, which is almost always bad news. So red, instinctively, you'll think this is a negative event that occurred, with Audius moving a little over $2.5 million in tokens to exchanges for the purpose of likely selling off. That can sink prices. Let's see if there are any greens. That's the only one we haven't found here. There's another red. Here's a green. So back on March 7th, 3 days ago, we had an exchange address move a little over $1 million in coins of Constitution DAO to a non-exchange address. That's typically a good sign because it's an indication of whales having increased confidence. I'm sure Constitution DAO is down money right now since that event, just like almost everything in crypto. But this from 3 days ago indicated that a whale was satisfied with moving their money away from an exchange. So there you go. You have 4 different types of combinations there. And if you scroll through on a daily basis, you'll be able to see what kind of event it was. Here's another positive one with injective protocol and one with perpetual protocol, but they're pretty far and few between. You can see a lot of oranges and reds with a few yellows sprinkled in. Stargate Finance, that was a big one, 17.8 million. So I think this can be a very useful tool. We'll tell you guys more about it once we are in the process of releasing it. But for now, for the 14 of you or so who are tuning into this, based on the numbers I saw when I checked out our stream just now, you got a nice sneak preview there. And I'd love to hear what you guys think, ways to improve it, things you may want to see. You know us, we're very receptive, and we want to make these kinds of tools as accessible and awesome as they possibly can be. All right, so with that said, went over top transactions, exchanges, NVT, MVRV. What about a few Reddit posts? I pulled this one up. This was brought to me by one of our staff members earlier today. This is the kind of post you'll see when there's a lot of FUD in the markets going on, especially when 281 people agree with it. You know, if this was posted 2 weeks ago, when Bitcoin was still at 25K and everyone was kind of optimistic, you certainly wouldn't see people upvoting a post with the title, "We could see Bitcoin sub 15K and ETH 1K again." Now someone posted and they give explanations. They talk about Powell coming out and announcing the next rate hikes, as we discussed, Gemini collapsing before our eyes, JP Morgan axing crypto exchanges like they're going out of fashion, Silvergate Bank, that mainly dealt with crypto, has announced it's shutting down operations. It's interesting they say the sentiment isn't good, because that's actually a good thing. It means that if sentiment is actually bad, which our metrics are indicating there's some hints of, and there's a lot of shorting going on, that's actually a good sign of a bottom and less indication that prices would fall to these levels here. But overall, I mean, you see a negative post, tons of upvotes, a lot of sarcastic comments like this. You know, people distracting themselves so they don't have to be sad about the markets collapsing the way they have been. This is a FUD post, and we saw that a lot throughout 2022 as markets were falling as well. But when they get really extreme like this, you know, you really start to see the polarizing opinions start to pop out. This one announced that there's $159 million in liquidations. This was reported by our friends at Crypto Potato, who we've worked with before. So, I mean, these kind of articles really put into perspective how crazy this retrace has been. Maybe not as unexpected as some other collapses, because the 2022 retrace is still fresh in a lot of our minds. But regardless, people are talking about this. It is on people's minds, and these kinds of posts and articles are contributing to the rapidly rising social volume that we've seen. Anyways, why don't we look at a couple asset requests, if there are any, Balresh, and then we will wrap it up.
I don't think we had any, I'm afraid.
Quite all right. I can do a few on my own. One I wanted to look at is Maker. So Maker, what's going on here? We see that there was a huge run up here. It kind of ended on March 5th with prices almost getting to 1,000, which was quite a surprise. So a lot of people were interested in it. And then boom, we have this sudden drop off, and it's actually gone down 18% over the last 5 days, which, there are worse performers. Trading volume, you can see it's been declining. On-chain transaction volume declining. Daily active addresses. This is the thing with altcoins. When you see a sudden big jump, it's not really a good thing. It kind of means that there is some profit taking going on, especially when it's happening on a rise. Just like we saw during this very brief rise in Maker's price back on November 10th. Big daily active address spike, prices plummet right afterwards. Now, if you see a more gradual run up like this, that's organic, an organic rise in utility that justifies a price rise. And there we got all the way up to about 1144. So it's kind of I like this chart because it shows two ways in which daily active addresses can be useful. It's good when it rises slowly, bad when you suddenly see a spike which is like triple the normal trend or double the normal trend, and then prices quickly retrace. Circulation does not seem to be doing anything too special. Maybe a small bunch of extra tokens being moved here, but nothing significant. MVRV, just like most assets right now, the 30-day MVRV for Maker has fallen into the negative territory, sitting at about negative 6.7% for the 30-day and negative 6.5% for 365. It's certainly not the worst. If we look at this MVRV model and we find Maker, it's semi-underbought. So it's not one of the big dark green ones here, which are looking a lot more juicy at the moment compared to their historical averages. While we're here, just to name a few others, what is this here? AirSwap appears to be at a very, very high point. Aragon, Ampleforth, Anchor, Bluezell, Coin98, Dodo, Gitcoin. I'm just reading some of the highest. High Street, Linear, Mask, Phala, RLC, Serum, Scale, Spell Token, Storage, Super Rare, Super Farm, Synthetics, and VitDAO. These are just 20 or so of the best, or at least most underbought assets out there, according to this model, showing that there's probably the most trader pain revolving around those assets. And historically, in a zero-sum game where the MVRV will hover around 0%, their MVRVs, when combined with a short, medium, and long-term average trading return, they're showing the least returns right now, indicating there could be the most argument for at least a temporary upside to neutralize these and not have them be in this opportunity zone as they are right now. Now, going back to Maker, let's see if we can see anything else here. funding rate, you know, it's had its moments of being short, but right now it's generally pretty neutral. Whale transactions look like they have settled down. This was kind of the indication that some profit taking was going to send the price down on March 1st, 3rd, and 5th, respectively. And let's see what the percentage of supply looks like. So Maker's price is sitting at about 773. We would want to look at 1,000 to 10,000 and 10,000 to 100,000 mainly. Let's have all three of those just for a moment here. Add in the price. So we've got our sharks here that have been declining pretty rapidly. They've almost gone inverse to what the price is. So they're probably not a very good indicator of where prices move next. However, this red line certainly looks like it is. Look at how they've gradually moved up very precisely along with prices. You can see they peaked here on the 5th. We saw all those whale transactions right at the top on the 5th, and then they dropped back down. But look, they're still going up even after prices have moved down right here. I think that's a pretty good sign in my opinion. And, you know, further, you just look at, you know, where they were 6 months ago compared to now. Whales they were holding 28.05% of the supply. Now they're up to 33.73% of supply. That's a 20.25% increase on their holdings. That's huge. And I think it's a sign of confidence. We even look at the largest whales, 100,000 to 1 million coin addresses. These are all millionaires, some even hundreds of millions of dollars in these addresses. They've been going up very consistently as well, being at 18.72% of supply and going up to now to profit loss. If we draw a line right at 1.0, right about there, yeah, so the last few days we're starting to see some losses compile. Look at all these profit lines well above that 1.0 line. Those were indicative that a top was close. So yeah, now we've cooled off a bit, as you would expect. You can also notice mean dollar invested age, a lot of dormant coins being moved here, and that's actually flattened out the line or the average age in which coins are sitting in an address. I like the look of this a lot, and that supplements the good news we saw with the whales. Not much with network realized profit loss. Supply and exchanges, pretty neutral. Social volume and dominance, not much talk about Maker at all, even though it was one of the big stars around the beginning of the month. So I find that interesting. It's kind of under the radar. Weighted sentiment, very low. This is likely just a byproduct of it not being talked a lot right now. And development activity, about average. It is not the most developed by any means, but it's getting double-digit GitHub submissions on a daily basis. So it's certainly not looking like the kind of project that coders are ignoring and not trying to innovate. So I like the look of that too. All right, so that's Maker. Yeah, why don't we just conclude it here? I think this is good. You know, we've got a lot to work on today, and you know, your feedback is very helpful in giving us some ideas on how we can contribute to making Santiment a helpful platform for you guys. So please continue to spread the word. Use those referral links, which you can find right here in the top right under your account settings. And on behalf of Balresh and Maxim, who wasn't here today, myself, you know, I wish you all a very safe and comfortable weekend. Try not to think about the markets too much if it's something that's been causing you some stress. You know, during these times, we just have to make sure that we zoom out a little bit and understand where we are and that cycles like this happen all the time. So keep that in mind. We'll talk to you very soon and be safe.